In our last video, we unpacked the electronic date recognition clause, the EDR clause, and how it plays a critical role in insurance contracts by defining how electronic systems handle dates. But we realized to truly appreciate the why behind the EDR clause, we need to take you back in time to one of the biggest tech scares in modern history, the Y2K problem. That's right. Today, we're diving deep into what happened as the world approached the year 2000 and how this seemingly simple issue of date formatting nearly caused global chaos and forever changed how we write contracts and insurance policies. Question: what was the year 2000 problem, also known as the Y2K bug? Let's go back in time, not to 2000, but much earlier, to the 1960s through the 1980s. This was the early age of computing. Back then, computer memory was limited and very expensive, so programmers had to find ways to save space, even in the way they store dates. The core issue: instead of writing full years like 1969 or 1988, most systems were programmed to save just the last two digits. 1969 became 69, 1988 became 88, and, of course, 2000 would become 00. Sounds innocent, right? But here's the problem. When the clock hit midnight on January 1st, 2000, systems were set to flip the year from 99 to 00, and many computer systems would interpret 00 as 1900, not 2000. This small shortcut caused a global panic because thousands of computer systems around the world depended on accurate date recognition, and nobody knew just how badly they'd behave once the century changed. This tiny oversight had huge implications. Governments, banks, airlines, hospitals, nearly every industry was at risk. Let's look at some real-world fears and examples. 1. Banking sector. Systems that calculated interest rates, loan maturity, or credit card payments could suddenly become confused. A loan set to mature in 2001 might be recorded as 1901, triggering false overdue notices or zero interest balances. 2. Aviation and travel. Airline booking systems use date data to manage flights, schedules, and passenger records. If the system read 00 as 1900, it could cancel valid tickets or assign wrong departure times. Flight navigation and air traffic control systems, which also use GPS timestamps, were reviewed worldwide. 3. Healthcare systems. Medical equipment like heart monitors, infusion pumps, and diagnostic machines were at risk of crashing or delivering incorrect data. Hospital systems might miscalculate a patient's age or schedule surgeries on the wrong date. 4. Power grids and utilities. Some feared that national electricity grids could shut down due to date processing failures in the control software. Water treatment facilities, oil refineries, and nuclear plants were also considered high risk. 5. Business operations. Billing systems could send out incorrect invoices or show customers as being 100 years overdue. Inventory systems might reject goods as expired or future-dated when they were not. 6. Even elevators and traffic lights? Yes, many building systems and public infrastructure used programmable logic controllers, PLCs, that stored date-sensitive functions. Would elevators stop? Would traffic lights blink randomly? No one was sure. What did the world do? The global response: billions spent to fix it. By the mid-1990s, Y2K panic was global. Countries treated it like a national security threat. The U.S. government created Y2K response task forces. Banks and insurance companies spent millions auditing and updating their systems. Tech professionals worked overtime for years rewriting software, replacing outdated code, and conducting time travel testing, fast-forwarding systems to January 1st, 2000, to see what would happen. Some businesses even stockpiled paper records and generators just in case. In Kenya, like in many countries, banks, airlines, and telcos scrambled to audit their systems. Some even printed account balances in advance and prepared for manual backups. So, what actually happened on January 1st, 2000? At the stroke of midnight, the world held its breath, and almost nothing happened. There were a few minor glitches. Some weather sensors in Japan failed briefly. A few websites showed the wrong date. An Australian bus ticket machine charged passengers like it was 1900. But there were no major system failures, no blackouts, and no airline crashes. Reason? Because the world had taken it seriously. The Y2K bug didn't become a disaster, not because it wasn't real, but because people fixed it in time. Why it still matters today, and the insurance connection. The Y2K crisis taught us a valuable lesson. Something as small as how we store a date can threaten entire systems, even economies. And that brings us back to the insurance world. The Y2K scare exposed a real digital risk. What if a system failure caused losses, but not because of physical damage, just because the system couldn't recognize a date properly? That's when insurers and lawyers introduced the electronic date recognition clause into policies and contracts. Its role? To clarify how dates should be formatted, interpreted, and processed, and more importantly, to protect businesses and insurers from the financial fallout of future date-related system failures. It helped insurers define what would and wouldn't be covered in case of electronic failures due to date misinterpretation. Many general liability and property insurance policies began to exclude date-related risks unless properly handled or endorsed. It also led to greater awareness of how digital systems impact real-world risk. Conclusion. The year 2000 problem was more than just a tech glitch. It was a wake-up call. It showed us that system reliability, risk management, and clear digital policies are essential in today's data-driven world. It also gave rise to EDR clauses, which continue to protect insurers and businesses from digital date-related exposures. Yes, a two-digit shortcut in the 1970s almost caused a crisis in the 2000s and helped shape modern insurance contracts in the process. So now you know, the EDR clause wasn't born in a boardroom. It was born out of a global crisis that nearly derailed the digital age. It's a quiet little clause with a big job, keeping policies smart, clear, and future-proof. If you missed our last video on the EDR clause, check it out right here. And don't forget to like, share, and subscribe, because here at Insurance World TV, we simplify insurance for the real world.